This
Frank, how
conference will
old are
now
you?
be recorded.
Oh shit, never mind.
Yeah. Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 7:51 p.m., fashionably delayed, New York, New Jersey style. I do apologize for the technical issues which have been resolved by GoToMeeting. Not my fault. Um, this is a strategic new member introductory session, abbreviated version. We're going to have two more because I offer two more of these complimentary training sessions to all new members free of charge. Session will be recorded, uploaded to the YouTube channel. Somebody told me never say Google YouTube. You sound really stupid. I said, yes, I do sound stupid. So I'll just simply say YouTube. The YouTube channel. Full disclosure, this is purely for financial education, not for any solicitation or advice. And boom, let's just jump in. So guys, for the next couple of minutes, let's address one thing. I saw a couple of questions on listen, trading is a multifaceted business. It's not just like, it's like you throw yourself into an 800 horsepower car and all of a sudden they're asking you to drive when you're used to driving a Honda or a Toyota. So what happens is, especially options trading, just to be very direct, is a very fast moving business. It's kind of fast and slow. So what that basically means is that there are some trades that are going to be slow, and there are some trades that are going to move so fast, as we see every single day, and you just have to react to it. So one of the key things that I want to tell new traders, and I've been doing this for a while, and I think I heard you say how old I am. I'm 90 years old, okay? And I with a strike price of 120. All right, so that's it. Let's put it this way: whatever you are, I'm older than you. 14 years on Wall Street. Been doing this on my own since 2011. Independent, writing my own paychecks, and God bless and thank God every day. It's been a fantastic journey. As a trader, as a professional trader, I was not a professional trader on Wall Street. I was a institutional portfolio management guy. That's a fancy word of saying I manage people's money, as well as I managed in a team. I managed money for small pension funds, companies, and such. My background comes from Boston, where I did my fancy studying at Boston University and Babson College, which was rated 3 years higher than Harvard in their program that we were in. So you're talking to a smart guy. Now, smart doesn't mean you're going to make money in this business. This business needs what we call risk quantification, which basically in simple street language means balls. And what it also needs is brains. You cannot just make money, especially when you're trading options. And I'm showing Xlrn because I heard one of you guys say that. Um, and it requires some knowledge about what's happening with the market. The way the service is designed is to basically trade on a visual basis. In other words, you don't need to be a rocket scientist and know everything about options. You don't need to know everything about what's happening in the stock market or what the big shots are saying. And trust me, I was pretty, I didn't leave Wall Street because I was at the bottom. I left Wall Street when I was on the top. Why? Because I didn't feel like managing other people's money. I just wanted to manage my own money. And that was a beautiful experience. And thanks to my wife, she said, you know what? You want to do it? Just do it. So I work almost, 12, 14 hours a day, except I don't have to commute, 20, 30 minutes. I live in a lovely place here in Jersey City next to Liberty National Golf Course. But I don't have to wake up, shave, put on my fancy suit, and go and report to a boss. I am my own boss. And that's all that matters. Yeah.
That's nice.
And
That's
yeah,
nice.
and it takes a lot of discipline. People say, you know what, anyone can do this. No, traders are a special breed. They are almost like Marine snipers. There are a few who can pinpoint the targets and hit them hard from 5 miles away. All right, whether it's a bad ISIS guy or a bad Iraqi guy or a bad Mexican guy or whatever it may be. I'm pretty straightforward, so please don't take me the wrong way when I say things directly. The fact is that traders are like snipers. Option traders have to be better snipers. They have to understand the dynamics of all these little things that are happening, and they have to pinpoint the levels, and boom, they hit it. Told you guys yesterday to buy the friggin' market, pinpointed a couple of things, both on the SPYs and everything, and bam, today the markets were up more than 200 points, ended up 177 points. So that's the way we are. We are tactical traders. It requires a little bit of learning, and at the same time, it's not rocket science. I try to make it as simple as possible. My I shouldn't say Google, YouTube. My YouTube channel under new member introductory videos has multiple videos that I have done and uploaded up there, which I've conducted with new members. Feel free to hear them. You don't have to listen to all of them. Just and that's why you call it a fast forward button. You listen to a video, you get bored of it, you're not learning anything from it. Just move up forward. But there's a bunch of stuff out there which is absolutely fantastic. And instead of me repeating the whole stuff, you guys should go listen to it at your own time. Look at it on your iPhones, iPads, whatever you're looking at, and you will see. On a last note before we get into a couple of quick stocks and whatever, is the fact that options trading is a fast business. All right, it's a very high risk business. It's very high rewards. That's why we have a lot of frigging rewards on our table today. When I told you to guys buys the market yesterday down 430 points, and everybody out there was basically saying, "Oh my God, it's the end of the world," blah blah blah, and all that garbage, which is standard procedure. We pinpointed the points that we thought the markets would bounce from, and I don't think I act on a very robotic way. Now, this is not something that comes to people naturally. Just for you guys understand, technical trading is not something natural. This is something that you have to train your mind for, and you can't train your mind by just doing it on your own. It comes from a little bit of trading, a little bit of understanding, understanding of the technical analysis, and a little bit of working with me. Now, the first couple of sessions I do it for free. Look, I'm a business guy. I'm not here into welfare. I'm not here into basically telling people, giving people free money. I make a very decent sum of money. That's the reason why Oscar and who just within I just talked to him. I met him in my local store where we all live, and then he joined up the next day and he saw what was going on. Now, this is not, I repeat, technical trading is not something that comes naturally. It is something that you have to train yourself in. Now, in order to do that, between the introductory videos on YouTube, the free sessions that I give, these ones, you do have to sign up for the advanced coaching sessions. They don't cost thousands of bucks, all right? There is Online Trading Academy that'll charge you 14,000 bucks to teach you garbage that I can teach you in 5 minutes. It's a fact. It's a fact. Instead, a couple of $100, you sit down for those 5 sessions, bang, you come out of it, you're prepared. You're out there in the battlefields in Iraq and wherever you are fighting right now in Afghanistan, and you know where to shoot. That is what a little bit of the trading is all about. Okay. On that note, the real-time Twitter feed is where I deliver all my content, as you guys all know, and that is something that you kind of have to understand a little bit what I'm saying. Otherwise,
it is a fright. It's the ultimate zombie bank.
1 second.
Yeah, well,
what is
if
this
it were
garbage?
a bank in competition in the real marketplace?
1 second. That's Jim Grant. He's an old, I was going to say F word, who always thinks the U.S. economy is going to like go in a hell in a handbasket. His name is Jim Grant. That was a Google YouTube thing. It just suddenly came up. So basically my Twitter channel, and I do have these videos like explaining to new members like what this is, so you can look that up, is where a lot of the real hardcore stuff comes in. Now, this chart to somebody might look like, what the hell, man? You did, it's like, going to some sort of wild party in New York and you're looking at this. That's what your brain looks like, right? At the end of the night. But no, this is the VIX. This is the volatility index. Like, seriously, I know everything. Right? So the thing is, this is the volatility index. It's kind of telling you exactly, if you know how to read this chart, and some people might get it because, they might just look at it, stare at it, have a couple of drinks before you do it, it might be good. Don't do any like illegal drugs. Don't be high on some weird strain. Don't do rails. Definitely don't do anything else that's harder. But if you just have a couple of drinks and you look at this chart, it all friggin' makes sense, because this is arrows here, which means buy, 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 and this is arrows here saying sell, sell, sell. Now this is the inverse of the market, what we call the volatility index, the VIX. Okay. In the old days, we called it the Vixen, but we can't do that anymore because we're going to be sued for being sexist. And look, I have a beautiful wife, a great son, 21 years old, graduating from a great school in New York, who designs cars. He's probably got one of the biggest Instagram for one of his cars that most people in Jersey and New York know, but I won't talk about that right now. But the thing is, you know what? So because of that, we call it Mr. VIX. How about that? Okay, so we can call Mr. VIX whatever we want. So this is the VIX, the volatility index. So when it's going higher, when I'm showing this stuff for new members, just simple, quick, like fast forward stuff. When it's going higher, it's basically means that the market is going lower. And where's that little pen drawing tool? I have it. Pen. Hold on one sec. Choose pen color. Need that. Okay. So when it's going higher, that means markets are going lower. It's a contrarian index. It's what we call the canary in the coal mine. It's an inverse, it's inverse, opposite to the market. So VIX moving higher, that means all of a sudden the market's going down. This is extremely accurate. Extremely accurate. Now, can somebody follow it every like 10, 15 minutes? No, even I can. Even though I got 14 screens staring at me right now on my beautiful home on one corner, I'm like shut away in this beautiful array of numbers and pictures. But all you got to do is pattern recognition. What I want people to learn from my service is you don't need to be a freaking genius to make money. You need to be mentally stable. You need to work with a limited amount of money. Options trading is risky business, very high rewards. Everything that we bought yesterday was up anywhere from 60 to 100 and 110%. Okay, overall. It was, if not 200% on the Nvda call. Everything that we bought at the lows yesterday. So this was when the VIX was at the high yesterday, and this was the VIX today, the red candles. What we teach for all new members and everything as they sign up for the trading sessions, for the coaching sessions, is what each one of these candles mean. Each one of these candles is not there for people to say, oh, wow, they look pretty. Okay, these are all big money makers, all big money makers. If the market croaks, this VIX is going to go all the way up here to 22. That means the markets are going to be down another 400 points. We're going to be totally prepared. We were long VIX, Mr. VIX, and UVXY, which is the second cousin of the VIX, at anywhere from 60 cents to $1.10. This went to $2, this went to $3, and this went to almost $2. Do the math. And this is another thing that I want options traders to understand, or any trader to understand. You got to be quick in your head to figure out percentages. If you can't figure out percentages, if I tell you that I gave you a stock at 1 and it went to 3, let me ask you guys the question. How much profit did you make in net profits?
$2.
Right? Which is percentage-wise what?
200%.
Correct. Not 300%, correct?
Yeah.
Exactly. You're going to be a freaking smart trader. I test this question with most people and they say 300%, because that's what they think. Because you put down $1 down net, all right? You took out 3, that means you made 200%. Exactly. So the fact is that having a quick grasp of numbers very quickly as you're trading something from $1.10 to $1.60, you're like, okay, you can figure out the percentages really, really quick. So the VIX is very important, and I go over all that stuff, just giving you a little picture of this, erase all drawings. Now, how do I know whether the VIX is going to go there or not? There is something what we call the charts, what we call the externals. External is what your body looks like on the top. okay, on front. You look at yourself in the mirror one morning after and you're like you're seeing like this flushed head, and you got a cold, the whole works. Maybe you went out too late the night before, like whatever. You don't know what's wrong with you, okay? Then your internals, then you're feeling really sick in the afternoon. What do? You go to the doctor, okay? You go to the doctor. These are the internals. What does the doctor do? He checks you out. He says you're definitely sick, but we don't know what's wrong with you. He does a lot of like little tests. So he takes your blood, right? Am I right? He
Mm-hmm.
takes your blood and he says, let me send this over. Come back in 2 days and we'll tell you what's wrong with you. Well, this is your internals, the blood test. I've always taught it like this, and people get it right away. All right. And given the fact that I'm 90 years old, I should know. So saying all that, is the fact that externals, yes, we can read the patterns on the candles and stuff like that, but we have no idea what they're going to do unless we understand whether one is really sick, whether you have cancer, whether you have some other really like something long lasting other than a little cold. And that is what it's all about. That's why we look at the internal. The simplest way of looking at it, and this just to get you started, when I'm putting my charts out there and I'm showing things and the futures are down, one of the simplest things that I show is overbought, which means up here, oversold, which means down here conditions. Every time the markets are run 80 to 90% on
Highs and lows.
on mechanical robotics, which we call algorithmic. I don't call, that's a fact. Algorithmic high frequency trading black box computers that a lot of, some of my really smart buddies, and I wasn't that smart, okay, but I understood the markets. I understand the markets like better than most people. Algorithmic high frequency trading black boxes, okay, BB. How about I put BB, like BlackBerry, all right? So these are the things that move the market up and down. And that's the reason markets move so fast. One day they're down 420, and the next day they're up 250 points. And so somebody out there might think, what the heck is going on? Well, what the heck is going on? The machines are controlling the market. So how do we know that this might go up or down more? We look at the internals. We call them stochastics. So when the stochastics are oversold, you can bet your butt that 90% probability, because everything we do in trading is a game of probability. It's like poker. It's like being out in Vegas. You got to figure out the probability of whether the guy sitting across, the Chinese guy or the Spanish guy or the Indian guy or the Hong Kong guy, who are the biggest ballers in the world in Vegas or in Atlantic City, whether he's out to screw you. So instead of reading his eyeballs, which you can because he's wearing a pair of dark Dolce & Gabbana glasses, we look at charts. Okay, so if we can see this is going up, that means we have a little bit more room to maybe go up. And if it's down here, we know we have to take down some of our long positions and basically protect ourselves and buy a couple of short stuff, which I saw a couple of the comments on the chat room as I was fixing go to webinar. Short simply means you're shorting the market, you're betting it's going to fall. So very simple. The reason I'm spending a couple of extra minutes on the VIX, very important when I'm putting these charts out. And the more you look at it, you guys are going to get it better than I do. Trust me. Is when the VIX is moving higher and the candles are green, that means take it easy on going long on the market. And when the internals are still moving higher a little bit, that means we have a little bit more room to move higher on the VIX. That means the markets have a little bit room move to lower. Maybe we'll be down like 50 points at the open, and then there is this big bad green block known as a resistance. Anyway, I teach everything from from A to Z. So definitively sign up as a member. Then you can go to the members content on the website, sign up for the advanced coaching sessions. Like I repeat, my business is to make money off my own money, not to fleece people for thousands of dollars teaching them how to trade. It costs like maybe $200 or $300, which I pay mostly to my back office and go to webinar to run the services. Do it and you'll see the difference. Now, let's look at a couple of quick choose pen color.
Frank, I didn't mean to cut you off, but we're past 8 o'clock.
I know. I'm actually watching like who's coming into the chat room. 1 second. I know. I'm putting it down. Regular webinar will. I mean, it is after only Tuesday evening. I'm going to say 8:30 evening. So, who was the one who asked about? This is that's the VIX picture that I was showing. 1 second. Put it back on the screen. So who was the one? I mean, that was a very fast trade. We do these, quite often, not every day. The Xlrn, that was you,
Me?
John?
Yes.
It was you, right? So this is a highly speculative stock. I looked at it. I didn't know it was going to happen. I don't even know what the hell they came up with, where the stock went up like crazy. Mike Harrington, we're just doing a new member intro thing. So just stay tight. Mike is a very old member of ours, been with us for a long time, understand all the stuff that I do. So just want to let him know. So, all right. So this is a highly speculative stock. The stock was at, we have caught a couple of these. One of the ones that we caught, before I even show you guys this is Franco, right?
Yes.
Okay, good. So let me show you. The one that we went from 60 to 150 overnight, and no options, no options. It just happened. And the fact is that this is a serious company. I do a lot of research on the side on companies. I don't like talking about it because my business is not to make you become like big, like a lot of other services do, like a long-winded story on a company. My business is to show you with a little bit of introduction to what type of company it is. As you know, I put that on my Twitter feed a lot too. I speak about it a lot on my webinars. But you do your own due diligence. In other words, you go up there go on Google, learn on it, like why it's so important. I like this company, very simple. It is the world's first schizophrenic drug company. Okay, so this, if you look at my charts, I have arrows. I've shown it to you guys before, even recently, and I'll do it right now again. So, highlighter, that's better. So when the stock was at 2030, I had no freaking clue the stock existed. Okay, as a trader, you always have to look for new opportunities. Then I saw this. I subscribed to 3 new services: Benzenga, Briefing.com, which I rely the most on, another one. So, so basically, I saw this thing pass by, and the stock's going nuts. So I said, "Wow, what is this?" I see this big, huge candle. It's happening. Okay, the stock's gone from 20. It opens up at 38. It's at 60, almost at 60. I said, what the hell? There are no options on this. Fine. I'm going to buy a few shares. Look, I'm a baller, but I'm not stupid. All right? I'm not going to shoot myself in the head diving into the game without a strategy. There's no option. So I can't buy it cheap. So I got to buy shares. And if I'm going to buy shares around $60, $62, I'm not going to put 1,000 shares, which I can, which I should have. Instead, I'm going to say, okay, you guys do whatever you want. And if you're dealing with small money, doesn't matter. Buy 1 share. Now people say, why the hell do you tell us to buy 1 share? Because when you have a small skin in the game, even if it's $60, even if it's $120, even if it's $1,200, you are going to track it. You're going to feel the pain and the joy of making money or not making money. That's how you get involved. So when people say, oh man, I don't want to take the stock, I don't have that much money or that option, buy 1 frigging call. If it's an option at $8, try to buy one call. That's $800. If you have a small account, yeah, that might be a bigger chunk of your money. It doesn't matter. So always be involved, because that's the only way you will know how to really learn the business. When I put out all those earnings calls, do we think I go out there and buy like thousands of bucks worth of each of those calls? No, I literally buy 1 or 2 calls of each. And I have a big hit ratio. So when I look at that basket the next morning, I'm like, wow, I'm up 60%, even though 2 or 3 of them probably went to zero. Because in options, we know if you put in $2, $2 on a call, that means $200. What's your maximum risk? What's your maximum risk, Franco?
On $200.
That's it. So that's it. When a
Mhm.
stock, if you put it, and your upside is unlimited, that 200
Correct.
can go to 2,000, or it can go to 20K. And believe me, it's happened about 3 times on the service in the past couple of years. Sick.
Mm.
We call it financial pornography. Okay. I'm that serious. I used to say that to my big shot guys back on Wall Street. I said, and I never, and at that time, obviously, I wasn't that aggressive with trading and stuff. My own account I was, but I couldn't do it for the firm.
Mhm.
This is called financial pornography. When you buy Nvidia calls all day long at 60 cents, and they go this today at the top at $1.43, you just made yourself 120% for just holding it.
Yeah.
When you talk to people outside who don't understand this business, that includes my whole family, which is good. I don't want them involved in this. Okay, is the fact that, and they're very smart. And the fact is that's just the way it goes. But you have to not go like completely nuts on it. But yeah, that's exactly what it is. So this stock, for example, I'm just going to show this. We didn't buy it at 2030 because I didn't even know what this company was. I have different. One of my screens just scans stocks all day long, and then I look at it on my charts and I say, okay, should we do it or not? And it has to be quick. So we bought it at 60, 62, 63. What happens the next day? First of all, that same day it closes at 103. Am I that stupid? I sell a bunch of it. I just bought a couple hundred shares. It's a lot of money for 2 hours of work. Next day it opens down a little bit, around 78, and that's from almost 90. So everyone's like, "Oh my God!" So that's where real estate trading comes in. Instead of saying, "Oh my God, it's down 30 points," we look at the charts. I'm like saying everything is still friggin' green. Each of these candles are like beautiful candles. These are not little candles you buy at Bed Bath & Beyond. These are candles that can change your net worth. So I bought more after selling up here at the pop. When you get a pop like that, gotta sell it. You buy at 60, it's at almost 100. What do? You sit there and say, no, I'm not gonna sell it. Of course you're gonna sell a little bit. Then it pulls back around 78, 80. I buy a little more. Next thing I know, the thing goes to 150 within one day. Did I hold it all the way up to the 100 and 1 second? I gotta get used to this. How do you change the? Okay. Did I sell it all the way at 150? No, of course not. Yeah, I could be another bullshit trading service and tell you, yes, I sold everything at 151.99. No, I didn't. I was mostly out of it around 138, 140. It was too good to be true. Fantastic. So we're out of it. And this is all recorded on the Twitter feed and explained on my webinars too. So next, what happens? The stock falls. We started buying it around 62. We put, 62, 64, 65. Bunch of days go by. Couple of weeks. I keep on telling, buy KRTX, buy Karuna Therapeutics, schizophrenia drug. You know who's schizophrenic? Every one of us is schizophrenic. Look at yourself in the morning, look at yourself in the evening, look at yourself when you're talking to a business partner, look at yourself when you're talking to your wife or whatever. Everyone is a schizo, all right? And trust me, once you accept that, life is okay, all right? I'm dead serious. So saying all that, this is for real medically diagnosed schizophrenic, which maybe some of our traders are. I don't know. And if they are, then they should definitively take the advanced coaching session so I can fix their schizophrenia and their dementia. I'm serious. So saying all that, no. So saying all that, so we buy 62. Guess what the stock goes to? 116. So I buy, and by that time, by the way, this time they didn't have any options. So I'm like, geez, man, it's a couple hundred shares. It's like blocking away a bunch of my money. You buy 100 shares, that's it's $60,000. That's, you know, yeah, even a margin is 30,000 bucks. And then it goes to 84. You buy more. That's another, you know, if you buy another 100 shares, that's another 8,400 bucks. If you buy 1,000 shares, that's 84,000 bucks. I mean, you're dealing with like a chunk of money that's been taken away from your trading capital. So no options. All of a sudden, the options come. So I put out on my Twitter feed, options. So we buy those options around 560 when the stock was on 72. I sold it at 14 in 4 days. Okay, so you buy something at $5 and you sell it at 14 or 15. It actually went to 17. Now it came down here. As a technical guy, I'm looking at this like the Matrix. You know the Matrix. And what was the guy's name? Keanu Reeves. I'm freaking Keanu Reeves times better when it comes to trading. All right. So I'm looking at this. I'm like, this is beautiful. The only reason the stock fell from 115 and we sold it right at the top, almost. It's on the Twitter feed, and the stock drops down to 90. Do I short it? Absolutely not. It's too powerful a company. It's a schizophrenic company. It's going to turn around and slash my throat if I short it. I'd rather be long it. And this is a beautiful chart. This is what we call in the business. Still trying to get used to this new format on the thing. And I know all of you know the answer. What is this called? What is this pattern?
Cup and handle.
Yes.
Or double,
Yes.
double bottom as well.
Yep. It's a double bottom. It's a double bottom, but more importantly, it's a cup and handle. This is what a cup and handle looks like. Now, if people want to learn about patterns, there are great guys on YouTube who teach all about pattern stuff. I personally have explained every one of these patterns. Please go into YouTube, new member introductory playlist, look for the video which says chart pattern analysis, listen to it. I explain these patterns and I explain the behavioral aspect of it, why it happens. You guys are gonna love it. I must have been in a good mood to explain all that stuff because right now I have no patience. I'm just kidding, but seriously. So saying all that, if somebody pays me, I have a lot of patience. So saying all that, that's a cup, the depth of the cup, the handle, and bang. So guess what? This one right now is in that cup and handle pattern, and it's going to go bang. I have almost an 80% probability. And again, nothing is guaranteed in the business, but I've been more right than wrong. This stock is going to go to 140, 150. So I'm long the calls at around $9. They went to about 11. Yawn. When you're options traders, you don't want a stock from option to go from 9 to 11. You want it to go from 9 to 20. So this, ladies and gentlemen, is a cup. That's a handle, as Z correctly pointed out, and this is what's going to happen. Now, can it be higher than that? Let's put it this way. I don't like getting people's hopes too high. It's a business is about managing expectations. We got these people called Heisenberg on the chat room. Gee, I love it, man. Heisenberg. Either they're a freaking Nazi or they're a balloon that blew up. Okay, that's a Hindenburg. I'm sorry, that's a Hindenburg. You know the Hindenburg, the big, the Germans. They built the Hindenburg. That was huge. Germans are always smart, man. Nazis are not. They're all freaking smart. And we love German cars, especially the V8s. So anyway, the fact is that this is what's going to happen. Now, going back to it, and I'm going to close this out, and then we're going to restart so people can come in and join this meeting, I guess. Is this other stock that we picked up today? I have no idea what it's going to do. This is spec stock. That's still getting used to the name. 1 second. What the hell? Now, when you guys are following these webinars, try to look at it a big screen as much as possible. The more you see, the better you do. You know, that should be another one of my slogans. So Xlrn, didn't even know what that stock was. I saw it this morning on one of my scans. I'm like, wow, look at this. Thank God we didn't buy it at the top. We actually bought it at 75 and the freaking stock closed at 80 and change, right?
Yeah.
Yeah, exactly. I mean, I just bought a couple of calls like, oh, let's do it. So,
I have a bunch of them.
oh, you do? Well, you better take it easy because this thing might go to zero. I'm just kidding. No, don't go nuts on it. You're probably going to do well because remember, a lot of my members who are like kind of aggressive like I used to be very aggressive with my trading. But you know what? They tend to do a lot better. I mean, I took a $5,000 account into almost a $260,000 account years ago without even thinking. I had some idea about technical analysis, whatever, but I used to just know stocks back on Wall Street. Boom. My compliance department called me and goes, "What the hell are you doing?" I said, "What am I doing? I'm trading with my own money." They're like, "Okay, you can't do this." I'm like, "That's it. I'm leaving." So I'm serious. So yeah, sometimes it's better to be, like say ignorance is bliss. So just be careful. That's all. I mean, now I'm more careful, but I'm more consistent. You know what I'm saying? So I'm more consistent, so I make more money going forward. But I miss those days when I used to be bam, bam, bam. Just pedal to the metal. Zero to 120 in 3.4 seconds. I can't do that anymore. So I can, but got more responsibilities. So saying all that, this stock is pretty serious at this point. Let me just show this to you guys very quickly, where it can go. Technical analysis doesn't matter because at this point, this stock is like completely broken out in a big way. So one second, just got to show it. In fact, I'm doing this for the first time for myself. And I'm going to show you how if this thing is really, I actually, I'll be the first one to admit, I have no idea what this one does. It was so quick. I didn't even see why the stock went up. What's the move on this thing? $58. What's the bottom? $18. Okay, so we're talking about $40, right? 58, 18, $40, right? So let me get the pen out. These are exciting stuff. In fact, I'm going to buy a whole. I bought a bunch of options that were up like 100% in a few minutes, but I might put in a nice position on this. Once I do my little due diligence, and I'll definitely share with you guys. Pen. Okay. So the bet, this width, and this applies to many differences called a range. This range goes all the way to October of 2014. Holy shit. Talk about a multi-year breakout. Now I'm getting excited. They say longer the base, the higher it goes. All right. And that's not a club term when you're trying to data check. All right. So I'm telling you right out. So this is a 5-year base. Wow. So these guys must have done something amazing. A 5-year base and pretty wide base, So we called it 58 and 18, 40 points, right? So if you add 40 to 58, what does it come to? 98. So net, you got a stock which is going to about $100. Given the momentum, given basic long multi-year breakout. All right. Just want to pass on that to you guys. All right. Who else wants to ask anything quick? Are you guys there?
Yeah, we're
I'm
here.
here.
Talk about Aapl
Yeah.
already.
Aapl told you it was going to go to 327. It went to 327. That's it.
Yeah.
Yeah. Aapl is going to be tricky. I'm just telling you. I just bought like a few calls on Aapl. I didn't even do the straddle, all that stuff. And let's take a look at Aapl. Look, the way I like things, and which most of you business guys will like, especially people who are running their own businesses, you want to buy things which are kind of distressed, which are not pushing new price levels and bidding wars and stuff. You want to buy something where the guy is a committed seller because his wife just ran away with a 20-year-old guy, and the guy's got like, 10 million bucks, and he's just like, shit, I hate this house, I want to sell it, right?
Mm-hmm.
Yeah, and so that's the type of stocks I like, and I'm trying to get my pen back. Okay, so saying all that, I have said it, and I'll say again. So this is your Aapl monthly chart. Like, I mean, people can say, "Oh my God, how much high?" Aapl could go to 300 bucks. Aapl comes up with a 3G phone. Aapl comes up with a bigger phone. I'm gonna buy. I'm sick and tired of using the largest XX Max. It's not good enough for me. It kills my eyes because I'm running my whole business off that at times when I'm away from my PCs, personal computers. Like, give me a Samsung type foldable Aapl. Give me a foldable Aapl with a 9-inch screen or an 8-inch screen. Shit. And give me a price. I don't care about the price level, that's fine. But as long as Verizon have the payment plans and stuff, like, fine. I'm not going to go out there and pay $3,000 for a phone. I mean, I got 2 iPhones. Everybody in the house got iPhone, iPads, like the whole works. So Apple's got to do something more real. So I'm looking. This was my original Aapl target that I showed out, that I explained on the webinar, which was the upper Bollinger, 326.76, 327 at that time. This stock went to 327.90 after hours or something like that. So Apple's fine, but you guys want to make some and it's going to go higher, in my opinion. Futures are really climbing right now, up 6. They were down like 4 when we started. You know why futures are up right now after they were down like 5 points when we started?
Most likely Asian market opened.
No, because Clueless Trading started their webinar. That's why. Okay, they're all listening to us. All right, we are the karma. Yeah, I mean, we're half kidding, because we frigging started the webinar. We started explaining what the hell was going on with the markets. Nobody was explaining the markets the way it does. By the way, Heisenberg, where is Heisenberg? I want to meet Heisenberg. Let me try to put this meeting. I guess if I copy the link and then just put it back there again, they should just click and come.
Yeah, makes sense.
You know what they say in the business? If you build, they shall all come, right? So if I keep on producing the great content, they'll all come. That's the way it is. We should
Frank,
have, like I said, we should have 1,000 members. Yes, sir. Go ahead.
Frank, is that the other chart was a BIX chart? Is this the same one? Is
No,
this a
no.
VIX?
Okay, that's a very good question. No, the VIX is upside down, right? So this is the actual chart of the market. This is the actual chart of the stock market. So when I look at the daily, this is the 1 hour. This is the actual. Oh, Heisenberg said, got it. Good. I want to meet this Heisenberg. I'm going to name my next rescue dog Heisenberg. It says I don't have enough space. And, wifey goes out there and till she buys another house, whatever. Seriously, we got 3 dogs and 3 cats, so I can't wait for the next dog. It's called Heisenberg. Heisenberg is going to come in right now. I love it, and it's a Heisenberg with the exclamation mark. Whoever this is interesting, lady, male or female. This is the chart. Good
Might
question,
be a female.
Franco. And might be a female. And Franco, I will be doing a real, like I said, on the Google, YouTube,
The YouTube.
YouTube, yeah. I do have very answers to your simple questions, but I will sometime this week or on the weekend sit down with you and a couple of other new members who came in and really do like a basic 1 to A, B, C, D type of thing. All right. Even though you're catching up on everything, but I'll certainly do that. Just letting you know. All right.
Thank you.
Yeah, absolutely. You'll pick up things fast. Trust me, it's not difficult. So this is a daily chart of the stock market. Forget the future. Yeah, this is a SPY. This is what the SPY looks like. So people say, oh, where were we years ago? This is where we were. Way down there. So this is where we are right now. So when things happen, like with a jolt, like what happened in the past couple of days, and everyone just freaks out, and I looked at everything and I said, buy the crap. I didn't say buy the crap out, but I did say buy this and that yesterday. And nobody out there, I don't care what service you used, what media you listen to, nobody said buy the market. Am I right or wrong?
Mm-hmm.
Yeah. And I showed, and again, I'm not here to get like, oh, you're the greatest accolades. I'm well beyond that. When you're 90 years old, you don't want to hear compliments. I just want to make more money till I'm 130. So the point is that I basically said very clearly, I showed you guys the McClennan oscillator at the end of the night, and I said, we're going to have a severe bounce. Listen to my past video. I said, you don't even need to do anything. But when you look at the McClennan oscillator at minus 78, minus 62, buy the crap out of the market. Have you guys not heard me say that?
Yeah.
Yeah. So now, instead of just hearing me, you actually see, if you're a new member, you're seeing it in real action. You could have bought $10,000 worth of stuff and taken out $30,000 today. That's serious. Okay? You could have, or at least 25,000. So the fact is that I'm going to show it to you again. When the McClennan oscillator, when it gets like that, and again, I'm not the genius who figures out those oscillators. I'm the genius who knows how to read those things really well. Like I said, the beauty about trading is you are making money off other people's brains. Let them run the companies. Let us figure out when we should buy and sell them. And that's the beauty about trading. You don't need to be the guy who runs the company. No inventory, just moving invisible numbers. Isn't that beautiful? So while I'm talking to you guys, I am setting up the McClennan oscillator on the other side to take a look at it where it is today. One second. So always remember one thing about trading. Trading is about a brainwash job, okay? Any profession that you really believe in, you have to be brainwashed in. So I got brainwashed in a long time ago because I worked on Wall Street. So I saw numbers move around and I'm like, holy shit, you can, make a lot of money doing different things. One second. Some people say, oh, it's always real estate and stuff. Yeah, real estate is great. But real estate is inventory. You still got to hold the thing and you got to go through 10 different layers of legal lawyers and title searches and blah, blah, blah. And then finally, the buyer hopefully comes out with a mortgage and buys it or doesn't. In our business, you just hit sell and it's sell. You hit buy, it's a buy. Okay, it's almost done. One second. So that's why I like the business, to be honest with you. It's less headache. And there we are. And if you're good at it, it's great. Oh, this is one heck of a chart. This market's freaking going higher. It's going higher. Now, the market doesn't show its hand in the first couple of minutes, an hour of trading. So that's what my Twitter feed tries to, guide people as I'm trying to understand what the market's doing. That's what I said, early session selling. Was I right? Absolutely. Market went up and then sold off a little bit. Because that's when the earlier the selling is in the day, just so you guys all understand, that means the margin clerks are finishing off and decimating the guys who didn't come up with the money that they owe, called margin. So the margin clerks are like, see you later. We're selling you out. Did you guys understand what I mean? Like, let me put this analogy of property. You don't come up with the mortgage payments, you're going to foreclose on the house, right? Exactly. So the same thing with margin selling. So when you see markets go down a lot, you generally tend to see this little quick burp up called a short squeeze, and then they come in and say, dude, you got the money? No, it's going to be next week, the week after. See you later. Chop, chop. That markets go down a little bit more. Once that's settled, then the markets have time to move higher. So everything in trading is an analogy of our daily lives. So let's look at some technical stuff. Let me get my lovely pen now that I have access to it. Bang, bang, bang. Do I have access to it? Hold on. Oops, there's so many applications open on my freaking screen. I'm trying to get to one. In the meantime, ask any question you want, guys. I'll answer as I'm talking. I multitask. Where is the pen? Ah, stupid me finally got the pen. Forget all this stuff. Just look at this very closely. All right? Actually, I need to take this out. That's better. Pen, pen. Do I have pen? I have pen. Are you guys all with me?
Yes.
Yes.
All right. If I did nothing and just produced 3 single charts to tell you the directional bias of the market, what's going to happen over the next 3 to 5, 7 to 10 days. The Nymo, New York Stock Exchange, McClennan Oscillator, which people who have been with me know very, very, very well, has been dead right. I told you guys yesterday when I showed the same chart when it was at minus 62.67. I put it up there, I believe at 7 or 8 in the evening. Yes or no? Always follow my Twitter feed. I don't care if you're having a fight with your wife, boyfriend, dog, whatever, or you're having a lovely evening with the beautiful woman that you met, man that you met, or whoever, what it is. Take a quick look at my Twitter feed before you go to bed. Okay? Because I might put up something in there that you might wake up with some serious money on the next morning. Okay? Because I'm connected to my iPhone and I see something good. I'm like, boom. Not something good, something that is a money-making good. So I put this chart out at minus 62. What did I tell people on Sunday strategic webinar? Somebody just echo my words, what I say about the McClennan oscillator. No one remembers? You guys all have dementia. So let me just remind you guys. Can you guys hear me?
Yeah.
Yeah, we're good.
All right. So what? You guys all forgot? Like I've said this like a whole bunch of times, like loudly. None of you remember. Okay. Well, stop frigging drinking. Well, don't drink. I mean, drinking is fine, actually. All traders should drink. But seriously, just focus a little bit more, okay? I said every single time you get down to minus 52, minus 52, 78, minus 52, minus 65, minus 40, buy the crap out of the market. How many times have I said that? Multiple times. And the reason I say it, because most of you were on my webinars, aside from Franco, on this. Even Oscar has been on the webinar. Guys, on this is called a no-brainer. Now, a no-brainer meaning like you don't have to watch everything that's happening like during the day, like back and forth, blah, 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 blah. This is almost a no-brainer. When it gets to minus 62, now people say, well, what stock should I buy? Forget stocks. You can buy the SPY. You can buy the QQQ, the spiders. So you're talking the general market. So you don't have individual stock risk. We had individual stock risk today, even though we had so many winners. What was the one on the second round that I lost money on today? Beyond. JP Morgan comes out and fucking puts a sell on it. Thank God that I took like a bunch out yesterday. Imagine if I had the whole thing in there. It's like beyond me, like what the F? JP Morgan's the one who said, oh, go buy it. And then they lowered that on Beyond Meat, their price target from 138 to 134. I'm scratching my head like, what? Like, I'm an ex-Wall Street guy, so I know what the idiot was doing. They want to buy the stock back cheaper. Okay? So,
Could it be because McDonald's earnings are coming up as well? So
no, well, what the hell matters? Beyond Burger is, McDonald's is making money off Beyond Burger. So
yeah,
they
it
are
could
in
be
bed
the-
together. McDonald's is a great stock. I mean, you made money right, left, and center. Okay? In Canada, they're all serving beyond breakfast. So it's like, you know, Beyond and Boeing were the only two stocks red on my portfolio.
Mm-hmm.
Everything else went through the roof. So that's what I'm saying. So anyway, let's stick to something more important. So McClennan oscillator goes down to these levels. Forget the number. Just look at when it dives down like this red cliffs, and the stochastics are turning. Buy the crap out of the market. The markets are going to be fine till this Valentine's Day, February 14th. In between back and forth. I've said this how many times? A lot. When's Super Bowl?
Sunday.
And what are the teams playing?
I don't know the teams.
I
Chiefs
know.
and
I
San
had to
Francisco.
actually personally have to look it up because they're new teams. Kansas
Mhm.
something and right?
Chiefs and San Francisco 49ers, I think.
49ers and who else? I know we got to Google, huh?
Chiefs, Kansas.
Kansas. So I was right on the Kansas part and the 49ers. Wow, what a bunch of disparate teams. So that's going to be a nice betting thing. I'm going to go to Bayonne Crossing and bet a couple of $100 on the, get some odds on Kansas. Let them beat the freaking 49ers. Seriously. My son actually went to school and with one of the 49ers ex-quarterbacks. Forget his name. But yeah, that's it. Let's put money down on the Kansas guys, man. Let's do it. Let Middle America rule. And say, yeah, So anyway, so bottom line is when things get this oversold, the market always inevitably has a sharp bounce. Now, here's the good news. Let's say we missed out on the bounce today, which we didn't. Okay. The fact is that this is shaping up. So when this line keeps on going higher and it goes over 80, this is nothing but the full stochastics. It's the same thing as a relative strength index. Remember, you sell overbought, you buy oversold. You sell OB and you buy OS. That's it. Just keep it as simple as that before you get into the more advanced stuff. All right, Franco?
Yeah,
And Ronaldo, you're in there right now?
he's not in.
Yes, I'm in. I'm in.
Yeah, he's in there. Yeah.
Oh,
If
you're
you
in?
missed the
Okay.
first part, doesn't matter. I'm putting this up on the Google I say Google YouTube one more time. My son's gonna slap me. On YouTube. Okay. So yeah. So you buy overbought when things go like this, like overbought. That's like when Apple's at like 320, whatever, and boom. Didn't I say in the last webinar Apple's gonna go to 306? Apple went to 304. Didn't I tell you guys? Like I actually didn't put out a buy alert on Apple, but yesterday, but told you guys enough things out there. I like Square a lot. Told you guys to buy Square, like $68. The friggin' thing is at 74. Probably going to go to $80. Like I said, I like distressed property, which can move up to high valuation. So that's it. You buy overbought, oversold, and you sell overbought. It's really as simple as that. That's the whole business. How you manage it in the middle is what's difficult. So what it really comes down to is and really, I really want to keep things simple. Till people want to understand more of the internal dynamics, complexities of the thing, I'll get into it. I explain the most difficult, complex economic theories and stuff in a very simple way. But for that, you got to pay me for the advanced coaching sessions. But these sessions, very simple. We are bouncing now. What does that mean? We are at minus 38. Does that mean we're going to collapse from minus 38 and go all the way down? Sure, it can happen. Sure, it can happen. But chances are that it's going to at least climb back up, climb back up, climb back up, climb back up, going all the way to August, just showing you some numbers. And every time the stochastics get that oversold, it generally tends to go and get overbought. Overbought, OB, oversold. You buy oversold, you sell overbought. It's really as simple as that. Does that mean that Apple's going to keep on going higher? Probably not. Probably yes. But are there many other great situations that I put out there that people should buy? Yes. That's basically it, guys. Now, let's look at one other chart, and I'm going to address a couple of, because this session is kind of moving on to the real session. So we have another 10, 15 minutes to go over it. So in the meantime, feel free to direct any question. Ooh, look at that. One second, guys. Wow, talk about a cliff dive. This was the cliff dive that happened. Wow, this is the first time I'm actually seeing the chart today. Thanks to you guys.
Frank,
Go ahead, I'm listening.
Frank, I think the screen is not really centralized. There's a part of the screen we can't see. Towards the
I
left.
don't, not sure why, because according to GoToMeeting, you guys have full access to the screen. Z, you need to tell me.
Yeah, it seems like like the far right left side of the screen can't see that. Like
Yeah,
where it says SPX on top of the chart, we only see half of the S, and towards the left of it, we can't see it any further.
yeah.
Okay, not sure why, but I will try to fix it. Not sure why at all. Now, before when I was showing the screens, you guys could see it?
It was the same way the other time. I think most likely your screen resolution, if you're doing it from a monitor, maybe it's not there.
Maybe it's a screen resolution thing.
Yeah,
Hmm.
What about now?
it's same. Maybe if you don't do full screen and just
Okay, I'm not doing full screen. What about
now
now?
it's better. Actually, the size of the chart didn't change, so it's better. Yeah.
Yeah, it's probably just a computer resolution thing.
Yeah.
Yeah. Okay, you guys see that? So
Yeah.
what
Yeah.
is this? What this is telling me is that we could have a little bit more downside, but we're getting down to the levels where the market becomes a screaming buy like it was yesterday. So holy shit, oh, excuse me, futures are going nuts right now.
Yeah.
They're up 11 points. Let me just put that screen in here. Yeah.
It's up 10. Yeah.
I swear to God. Imagine if you guys just believed everything I said and just bought the crap out of the market yesterday. So this Frank, this clueless trading guy is truly clueless. He's so goddamn good. Seriously, I mean, think about what I was telling people, like, what was going on, what was doing. I didn't like the closing at the end, but I did say buy. I mean, now it's just like 1 second. This is going to show it. This is beautiful. This is beautiful. What you guys have to follow is my Fibonacci retracements. You know the ones I'm talking about? I've said that many, many times. Here's another thing I want to remind all new members. Ronaldo, Oscar, Mr. Montalvo, can you hear me?
Yeah, I can hear you.
Yeah, I
Okay.
get it.
Okay. Did you sign up for a free trial? Did you sign up for a
Yes.
member?
Yes, I did.
Okay. Remember, free trial is like playing with paper money. All right. Sign up as a member, then you learn the whole crap. In the meantime, enjoy. All right. So, so like I said, it's not a problem. That should be red actually. I'm glad that you're here, free trial or not. But people say, I trade with paper money on Thinkorswim. I want to learn the business. So no, that's fine. But you know what the difference between having a paper account and a real money account? What's the difference?
Real money.
And what does real money do to your brain? But I'm asking a serious question. You guys are all grown guys. I want to hear an answer. What does real money trading do to your brain?
Emotions.
What does it do to your brain? I know it does emotions, of course. You have emotions too when you go to the bed. Huh? This is what we say in New York, okay? Real money fucks your brain out, okay? Because when you're dealing with, wake up and listen to it, all right? Real money means that when you're making that $2,000-3,000 on a trade, you're like, F yeah, I'm the king. And when you're losing that 4,000 and you shouldn't be selling, and I'm telling the charts for you guys to buy it, and you being a wuss, and you're like, no, I'm going to sell, and you don't believe in my charts, and then next morning you could be up $4,000. Your brain is so effed up, you don't even know where to move, right? Exactly. Okay, that's what real money does, and that's why charts are so important. Did I not feel crap yesterday? Did I not keep on buying selectively? Absolutely. Did I not buy? I won't even tell you how much of Nvda I bought at 65 cents. Did I not sell a whole bunch at $1.40 at 120% profit? Did I not buy the spike calls at 325? the 325 strikes, which were up close to 110%. Did I buy Amazon? No. Did I buy Netflix this morning at the lows and yesterday? And this thing went from 91 cents to 250, and I sold it most around $1.90. Did I buy Tesla? No. Did I buy Square, the crap out of it, up 165%? That's what real money does to you. Makes you feel like crap. But if you want to be like in the Oprah show, like feeling like crap, like, you know, telling your sob stories, please don't join Clueless Trading. You want to be a real guy? You want to show your real muscle instead of being in a club with a fancy Versace shirt on? You want to see yourself how you make real money? Then join us. And join us real. All right? So this is a great move that I'm seeing. So what we're doing right now is we're probably going to go about 329 on the SPYs by tomorrow morning. That means the futures are going to be up nicely. Now, the E-mini futures, the difference between that and the SPYs are not trading overnight, okay, for new members, just so you guys don't know this, all right? So this is what happened. This is what happened. And we're going to cut this close. Close this right after this. Let me get my little drawing pens. And everything that I say, guys, I've lived it. I know it. And nobody can tell me something I don't know, especially about this business. Everyone can be a big kahuna, like a big stud in every other business. You be a big stud in this business, that's when you know you're a big stud. That's what you go to bed with, okay? This is better than any freaking New York club that you can go to. It's all big talk shit. Trading, real trading, is where the real big talk comes in. So you got lots of different patterns. This is a triple bottom, inverse head and shoulder breakout. That happened this morning. This morning, ladies and gentlemen, Tuesday at around 10 a.m. Markets vacillated, closed higher. Now we're here. This is a gap fill. And even though if you don't know all these technical terms, just look at my charts, like on Twitter feed. If you're busy during the day, look at it end of the day. You don't want to know about technical analysis, just buy my frigging alerts. How about that? Like they say, keep it simple, stupid. The KISS principle, right? So the fact that the markets are moving, the markets look like they want to go to 3,300. That means the markets are going to be up another 200 points between now and tomorrow. Now, tomorrow is a big day. Federal Reserve Bank of America. Apple delivered the goods, 322. Yeah, you know, I've called at 320, like, you know, you're either going to make money or not make money. It doesn't really matter. But overall, it's good for the markets. Boeing is tomorrow. I'm a big believer in Boeing, you know. It's almost like being a cult follower, right? So I am. I like Boeing's chart. It's not always very simple, but nothing crazy. All the crap that can be thrown at Boeing has been thrown, and now they're okay. So Boeing does something good, the stock will be up 10 bucks. 10 bucks, easy, from 314 to 325. Buy some cheap calls. So the markets are good. The gap fill is up here, and overall, that's it. So any other quick questions I can answer, because this is not a session to teach like the ABCD, but I'm more than happy to answer any quick question before I sign off. 9 p.m. And please ask. Don't feel shy. I'm here to help.
Frank, regarding those Apple calls again that we have, the 320s, are we, there's a pop tomorrow, are we out of those immediately or?
Immediately.
Yeah.
In my opinion, yeah. So whatever, this is the problem with options. You know, I don't like the fact that Apple's at 322.50. I loved it when it went to 327 because that's where I said the stock was going to go, right? The problem is, what I do a lot of the times, it is a trick that I'll tell you. I buy the options and I'll buy like 50 shares or 100 shares depending on the price of the stock, right? So you buy 100 shares of Apple, that's 32 grand. On a margin account, that's nothing. So you get that pop of 15 bucks, boom, you sell it. You know what I'm saying? And that's something that is a trick that you can use a lot, because this way you can cap yourself. Let's say you bought 100 shares of Apple before the close. The stock popped up to 327, up $16. You made yourself 1,600 bucks right there. After hours, you sell it, right? So regardless of what happened to the option, you already booked that $1,600 profit or $3,200 profit, depending on what you did, just for 10 minutes of work after hours. You understand what I'm saying? So
Yeah.
I do that quite a bit for quite a few stocks, because the problem is that with options, the stock could be up a lot the night before, and the next morning the hedge funds come in and just slam it down, and we're like, what the hell? And then maybe they take it up, but we don't have the ability to sell options after hours, which in my opinion is a crime, is a high crime, impeachment crime. Okay, just kidding. So it's like, this impeachment thing is such a freaking joke. Anyway,
and those
so
those beyond the beyond calls that we have February 7th, we cut
okay,
losses there, or we
I took a little bit of loss on that. Technically speaking, nothing broke on Beyond. From an options standpoint, it fucking sucked. Okay, because we made some decent money on Beyond the day before, and then I bought the half the amount that I bought. I'm like sitting on it, and there's nothing we can do thanks to JP Morgan playing the games with Beyond. Technically, nothing's wrong with Beyond. Beyond, by earnings, in my opinion, will be $140 stock. So this is where trade management comes in. There's no single rule for it, Oscar. It's a very good question. It's like you can bite your teeth and say, okay, I did well on the other than stuff, so I'm like, net, because trading options, just like trading stocks, is you look at your overall picture. So it's not like all your money's in Beyond whatever. So Beyond pretty much technically is not broken. When I look at my charts on Beyond, and I'm looking at it on my other screen, there's absolutely nothing wrong on Beyond on the daily. Absolutely nothing wrong. But short term, like as in today, it didn't do well. So Beyond, basically, personally speaking, if I was a portfolio manager on Beyond, I'd buy the crap out of that stock, because from a technical standpoint, the stock is destined for 160 based on my charts. And in fact, I'll show it to you instead of talking to you guys. Let me drag it onto the screen. Hello. Okay. So let me ask somebody who's not a technical genius or anything like that, whatever. Mr. Montalvo, Mr. Rodriguez, and Mr. Franco. When you look at this chart, forget if it's Beyond or non-Beyond or whatever. Does this look like a chart that's completely breaking down?
No.
Like remember, one thing about technical analysis is what's your first gut instinct is most probably going to be the first thing that you're going to be right on. So that's why I'm a visual trader. When you look at this chart, does it look like, oh my God, it's like completely gone, like I'm losing my house?
No.
No.
Okay. And Mr. Montalvo?
Yeah.
Yeah is not the answer. I just asked you a question.
No, it doesn't look like it. No, it doesn't look like it.
That's what I meant. Okay, thank you. Okay. And Mr. Rodriguez?
No.
Okay, good. So that's exactly what I say. Now, let me put this in fancy terms, because I'm supposed to be fancy, right? Okay, so let me put this on fancy terms. And all of you guys, stop this free trial crap. Just sign up so I can really get you guys going on the real training sessions. Try us out for a month or two. Spend those $70 better than spending it on Patron. All right. And trust me, you can buy like bottles after that if you do your trades right. Trust me, I know. Okay, let me get my pen. Did I have my? Okay. So what we call this in a fancy way is called a cup and a handle. So yes, Beyond can slip to 110, but technically speaking, nothing goes wrong as long as it holds 109. Now somebody will say, oh my God, Beyond went from 116 to 109. And we say, yes, that's fine, because we are not emotional traders. We are looking at, I'm going to clean this out and do it right again for you nice gentlemen. This is what we call a bull flag. This is what we call a bull flag. Straight line up from 70. I didn't tell people to buy at 70. We were trading here. We lost a couple of times. I'm like, what the hell? And they started breaking out. I said, buy 80, 90, 100. I said, buy, be on. Did I buy enough? Nope. Will I be buying a lot? Yes. Not just because I like Beyond Meat. I think it's pretty damn good. I mean, I eat like any red meat that comes in front of me, but Beyond Meat's damn good. Okay, so this is, bull flags look like this. Sideways, these are the best ones. This is all Frank, right? F. These are the best ones, and then they also can look like this. And they cross a little diagonal, which looks like a real flag. Oops, sorry. So basically, this is a bull flag. As long as the stock stays above 109. Now, every day can you make money on it? JP Morgan came in and downgraded the stock for $4. What a friggin' joke. You know? So this stock, in my opinion, what, generally speaking, from a technical standpoint, what does a bull flag do? It generally breaks out, follows the direction of the primary trend. What is the primary trend of the stock? Higher. As long as we don't break this, the primary trend is what takes precedence over short-term movement. Primary trend is higher. Let me clean this out. Primary trend is higher. Bull flag. It should have a trend continuation pattern as shown by these lovely pink lines, magenta lines. I love doing colors, easy on the eyes. Okay, so if you follow the lines, then the stock is telling you that it is going to go to 160, which also happens to be the Fib 50. Don't ask me about the Fibonacci 50 level, because I'm in love with Fibonacci, a great Italian mathematician who died in the 17th century, who has made me more money than ever, especially during extreme sell-offs in the market, called the Fibonacci 50. See, any drinks called Fibonacci out there? Should name one. That's serious, guys. Okay, I think the stock's 160. Now, in between, if it breaks 109, then things get non-Fibonacci. How about that? All right. But if it doesn't, it's going to vacillate like this. You can honestly try this out. I'm going to put this out tomorrow. Let's buy some March 160 calls, which are going to be pretty cheap. Here's the problem with these things. If you buy calls like $10 out, $5 out, they're pretty expensive. Can anyone tell me a call stay expensive on stocks which might be down $5, $6, $7 a day? Why do the calls stay very expensive?
Because more people are interested in it to get the
Yes.
stocks.
In a different way, you're saying the right thing. It basically means that the so-called smart money knows the stock is going higher, so they keep the premiums inflated. You got it? It's like a game that you want to get tickets on, and it doesn't matter if it's raining, rain, shine, or sun. The tickets are still inflated prices if you're trying to, get them. So it's the same thing with options. When you see options inflated premiums, Amazon premium is so inflated, even though the stock is like, has done nothing, honestly speaking, for the last couple of weeks. So the same thing with Beyond. The big money knows the stock is going higher, so they keep the premiums inflated or the options inflated. So just for the hell of it, buy it way out of the money. OTM means way out of the money, which means cheaper. So you can buy some March calls at 170, and I can bet you they're still pretty expensive. So
Frank,
yes, go ahead.
I have a question for you.
You do?
I know.
I
Yeah,
thought
yeah.
you had one. Yeah, I'm just kidding.
Well, let's go into
go ahead.
when you make the calls and the dates, what's more or less your technique to that when you're doing all
Listen,
this?
that's a loaded question. I've been doing this as a professional trader since 2011. I've been trading since 2007, since 2000, like 20 years, right? Like learning how to trade and stuff. So you ask me a question that I cannot answer in 1 minute.
Yeah.
You know what I'm saying? It's like
Yeah.
asking LeBron, like how he really learned how to shoot throw a ball. So I am not LeBron. I am certainly learning every single day. So
That's it.
there's a lot of techniques. There's no one simple technique, but I just explained a couple of the simple ones as to when I'm putting things out, like how I pick the options, why I think something will go there. There's a lot of different things that go in there. And that's why
Yeah.
I said, when you sign up as a member, we'll go through the free sessions. Then you want to spend a couple of bucks, really learn the techniques. I can assure you, when you're in the court, you're going to beat your opponent.
Very good.
That I can assure you, because on your own, definitely look at a lot of great YouTube videos. There are guys out there with 1 million hits and stuff, but they are not going to teach you the details like we do here. And they're good, and they're very good. So on the basics, definitely go with them. And then when you get a little bit more handle on it, then certainly, like I said, sign up for the advanced coaching session, certainly become a member. Yeah, I'll certainly teach you. That's not a problem.
That's good. I mean, the reason I ask that question is because every
Go
time
ahead.
you're saying, yeah, because every time you're saying buy more,
Yeah.
we got to look into your feed and find the date. That's more or less what you're asking us to do, right?
Well, basically, the thing is, my charts my charts pretty much showed. Let me show you Square, for example, right? I'm pretty hot on the stock for the last week or so, and there's a stock that I actually trade. This is the daily chart of Square, and let's take a look at why doesn't this go away from me? 1 second. That's a damn good question. Arrow. Okay, so 1 hour chart. Okay, on I looked at the 1 hour, and then I looked at the daily charts, and this is on bar chart. So bottom line is, we are not, and this is something very important for everyone to realize, we're not a ditto trading service. In other words, you're not mimicking exactly what I'm doing. You understand what I'm saying? Because I got a portfolio that's pretty broad, and I have multiple, like 17 to 18 positions running at any given time. Different dollar amounts or whatever. So there is no way in the world that you'll be able to navigate some of them that I'm selling, some of them that I'm buying. One of the things that you pointed out, and which I have taught many, many times to all my new members, is something called dollar cost averaging. You buy something at 2, markets go down 200 or 400 points like it did yesterday, and you're like, oh, what should I do? Sell completely out or no? I say no, buy. Okay, so the $2 call, you might have rebought. I mean, you dollar cost average down and bought more at 50 cents. So all of a sudden, your cost basis is not $2. You understand what I'm saying?
Mm-hmm.
Your average cost basis is no longer $2. It is maybe $1. And then today you sell it at $3 because the markets went up like nuts. That's why I say, when I'm repeating a buy on a particular stock, I'm repeating a buy on that based on the fact that most of the time, prices might have come down a little bit, and keep on buying. I kept on doing that with Nvda. I kept on buying the stock at 65, 70 cents. I sold a bunch of them today at $1.44 for more than 100%. I kept on telling people to buy General Electric. Hopefully, I'm going to be right on that. General Electric numbers come out tomorrow. GE, the calls on General Electric, which are cheap as hell, these are February 21st calls, were as cheap as 26 cents yesterday. They went to 43 cents. Do the math. That's up more than 80%. And these we call extreme lottos. And General Electric's chart looks pretty good. God forbid the company delivers some, and the stock closed at 11.90. God forbid the company delivers some strong numbers and some restructuring and everything I'm doing, and the stock goes to 12.50. I'm going to be selling those calls, which now my average cost is around 35 to 40 or less than 40 cents at probably $1. That's more than 200%. I mean, more than 100% ROI. Yeah. So the same thing with Square. Square calls, I asked originally people to buy the 365 calls. They were up like 110%. And then I told people to buy the 72 calls. Square just went past. This is one really hot looking chart. Really is. Because Square's high is 84. What's the actual high? 100. Look at this stock. Why chase a stock which is making $2, $3 new highs when you can buy something at 66, 70, 67, 68 when I told people to buy it, and it's at 74, and it looks like it wants to go to 83. Best case scenario, it wants to go to 83. And remember, everything's it's a probability game. So I think I'm going to be 70% right based on my chart. So 1 second. Where is my highlighter? Okay. Why doesn't this go away? It's really annoying. Okay. Sorry about that, guys. Okay. So here's a big money maker. I think if things go right, and at least from a technical, I mean, I look at a chart and I look like a robot. And I'm sure some of you look at it the same way. When you look at this chart, is this chart not like a little Lego, like a Lego building thing? Yes or no? Ronaldo.
Sure.
Yeah. Joe. Franco.
Yeah.
Oscar.
Yeah.
Michael. Yeah, totally. So forget about all the mumbo jumbo about all the big shot analysis. Bottom line is this is what the start's located. It's in a big range. That range is 85 and the low range is 55. What's Square going to do with their earnings? I don't know. I mean, that's going to say, oh, nobody's using Square. Like, we just went Square. We just went like, unless they say something really stupid, the stock is not going to fall to 55. It's a high probability move that the stock moves towards 80 to 85, right? As options plays, we're looking at $2, $3 increments on cheap options to make 30, 40, 50, 60, 80% of our money. To me, it's almost like a no-brainer. And if I'm wrong, I'm wrong. But this is a serious chart. Look at that. Now, this is a weekly chart, but this looks damn good to me. Now, somebody said, oh, it's really hard. Oh, it's going to go to 100. I'm like, okay, sure, give me 100. I'll give you like $10, But I'm not looking for 100. I'm looking for 78 or 85. If it goes to 85, I'm going to make 600% of my money. So I bought some time. I bought Feb 7th. And I'm looking at my other screen. Square. Mostly Feb 7th, which is fine. And then I'll buy some Feb 14. You don't think people will use Square payment systems during Valentine's? Sure, they will. But I also think outside the box. So that's it. It's really as simple as that. I'm not going to be chasing Apple up and down. I'm just telling you right away. That's why I just very few calls on it. Netflix, I trade it fast. Remember, there are stocks that you trade fast and stocks that you sit on. Those are mostly biotechs or takeover plays. Okay? I'm going to say takeovers. Documentum, things like that. They're cheap. You buy the calls at 80 cents. They're $1.20. That's 50% of your money. Sit back. If they get bought out, you're going to make 1,000%. It's happened. The fast ones, you guys really have to get your eyes glued to the screen. You can't be asking like, oh, where's it going? Well, where is it going? By the time you ask the question, where is it going? It's already gone or it's already down.
Mm-hmm.
Market is in good shape. The market is in good shape. That's all you got to remember. Now, being selective is good. If you do not want to play individual stocks, play the SPY. Takes a lot of headache away. If you want to not play individual tech stocks, play the QQQ, which involves techs and biotechs. Or if you want to play the broader market, play the DIA, the diamonds, which is the Dow Jones Industrial Average. The calls are cheap. You can buy a bunch of them. Yes, they might not give you like that 600-700% if a stock really goes berserk, but they will give you consistent profits. And that's it for now, guys. For all you free trial members, we're the real deal. Sign up as a gold or platinum member, whichever one you choose. Want to get into the real advanced coaching sessions, do that after a week or two after you get used to the system. But remember one thing, no other service will give you this type of expertise and real stuff, not the fake bullshit that's offered on many other services. And believe me, I know services. And the last thing I want to tell you guys straight out, my business doesn't run on a service. If I did that, then all I do is like put all kinds of fancy frills to get you guys all excited. I just show some very specialized stuff. I train you guys how to look at it because my real money comes from trading my own book, my own money. We are not one of those Walmart type of things. You walk in like all in one, like, okay, you know, this and that. I don't have 30 people working for me. I have a back office that handles the payment team and a couple of things on the website. We're in the constant process of improving the website, which in my opinion sucks. Okay. But the real deal is the real-time Twitter feed, the the YouTube channel. Take a peek at the Instagram channel whenever I have time. But the real money is made when you concentrate. That's all for now. God bless you all, and thank you for attending. Keep it real.
Good night.
Good night, guys.